All right, happy Friday, folks. Welcome back. Oh, did I do that again? Oh my God. Okay, I'll give my intro again. Give me a second. I'll be right back. Okay. I think it's working now. All right. All right. Yeah, it seems like half I'm gonna switch my mic around. I'm not gonna do it right now. But it seems like half the live streams I start end up with my mic being muted. Hello, let me do my intro again. So thanks for joining again. Welcome back, welcome back. Lot to talk about this week. Lot to talk about this week. Everything is popping its all-time highs, and yeah, there was some big news this week with the Fed, or at least potentially. There's a PPI number that came out this week. At the start of the week, the chances for a rate cut going into September were about 94%, actually. In other words, it was guaranteed to happen. The Fed was going to cut rates. But as of a higher than expected PPI, which is an inflation indicator coming out, that probability dropped, and that gave a big hiccup to the market. Was it yesterday or Wednesday? Was it? Now, I don't trade on news. It's fundamentals. It's fun to talk about. But yeah, it's all kind of within the setup. Let's just do this. It's all kind of within. It's all on the charts. Okay, everything from. All right, everything from the S&P 500 futures to Bitcoin. All the risk assets are doing potentially false breakouts on their all-time highs. Now, I talk about this all the time, and most of the time what happens is, if we want to see, and this is a daily chart right here, but you want to see big weekly bars. You don't want to see wicks like this. You want to see big, solid green bars in any kind of market that's going up, and that's going to keep it continuing further. You don't want to see this kind of hesitation. Now, that doesn't necessarily mean it's going to go down, but yeah, it kind of does, because everyone gets caught in this belief that, oh no, it's going up. They buy into it, and then when it doesn't follow through, sometimes they start closing their positions, and that's the inverse of that. Failed breakout higher is what I call a low sweep, and that's what I want to talk about today for trading. Came up in futures on the 1 minute trading this week, which I do on a daily basis. But more importantly, I think it happened in United Healthcare, and this was something that we've been talking about last week. I know I talked about it. That's why it's the topic of discussion this week. Healthcare. Look, I had a friend of mine hit me up earlier this week, and he said, "Hey, man, you got a bunch of money, man. Like you could make so much money right now in crypto if you just like take some leverage on." And I was like, "Nah, man, sorry. Like I'm gonna have to stay poor. Okay, I'm gonna have to have fun staying poor. I cannot physically make my fingers buy into something that is yeeting. Yeah, Ethereum bros are having a great time now. I mean, it's great, but you still got that all-time high from 2021 coming up at 4,867, and I mean, you got to break that with some really convincing momentum, a big closing bar above it before you're going to call that a breakout. It's very dangerous right now. And another thing we're going to talk about, of course, is Monero from last week, an update on the FUD, the attack, which doesn't seem to be like an attack, more of just a coordinated FUD campaign. And we're going to look at some people that are way smarter than me that have actually looked into the hash rate. Spoiler, they didn't actually get 51%, and the reorgs that they were able to show, in other words, empty blocks in a row that they were able to mine, is well within the realm of probability. Okay, that hasn't stopped the price going down, but I mean, really, zoom out, bro. like I said, I physically cannot make myself buy what everyone else is buying. I just can't. I cannot. I'm a contrarian to a fault. That means I miss out on, big rallies and all the meme stuff and all the stuff like that. I already own enough Nvidia. I'm not adding to it, so I'm pretty covered in AI. But as the topic of this web stream is going to, I said is or put for the stream, um, healthcare is the only thing I want to buy now because my primary thesis is this. It's not super complicated. The largest demographic, the wealthiest demographic in America, at least, and well, across the world too, is baby boomers. And it just makes a lot of sense that people want to stay alive. I mean, it's just kind of like the fundamental driving force of life is to continue living as long as you can. And all that money is going to go into keeping them healthy. And it was amazing to me, ironic, but not ironic if you put on your conspiracy theory hat and you talk about how Wall Street likes to take the price down, they like to suppress the price of something before they jack it back up, is the fact that, here, by the way, is a chart of the SPY with all the different sectors baked into it relative to the SPY. SPY is, of course, the shaded area. And, of course, the thing that's been doing the best, purple line up here, this is for the year to date, is, what is this? This is, oops, nope, no, 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 no. That is industrials. Oh, I didn't know that. And then XLE. But the worst performing is, of course, healthcare. Isn't that ironic? Isn't that ironic? At the cusp of all these boomers starting to retire and starting to need more and more healthcare, you have a massive drop in major healthcare providers. And we talked about this last week. Two things we talked about last week was United Healthcare and Eli Lilly. Eli Lilly was definitely something that we got from viewers of the stream. Even though I've been talking about it for years and years, I've owned it for over a decade. It's been printing money up until about 2 years ago, and then it started to kind of come off a little bit. But last week we talked about it hitting a major 50% retracement. That is at 640. Now, granted, I kind of wanted to come down to 594, but on Thursday of this week, or yes, was it Wednesday? Wednesday, it started popping up above it, and I like I said, I can't buy something going up, but I made myself pick up LLY just in case this was the level because it's starting to show some respect for it, and sure enough, it turned around for it. Now, the other one that we talked about last week has been a big, big, big name in healthcare, and that is, well, United Healthcare. And the reason I think we're up, what is it, almost 13% today, is because now it comes out that Berkshire Hathaway, Warren Buffett, even Michael Burry have made this the largest single holding in their portfolio. I think, hold on, I need to check on that on Berkshire Hathaway, but they definitely bought a bunch of it. Okay. And once that comes out, oh, okay, it's got confidence. But what did it hit? Well, first it hit the 50% level at 322. And, I was a little impatient and bought some in there. But then when it wasn't holding that, the next thing that's going to happen typically when you have a situation like that is going to come to the next level. And the patient level to wait for was going to be the volume profile level going back to all the way to 2017 to 2020. That's at 245. And it did what I call a low sweep. Let's just look at this right here. Now think about yourself as a trader, okay? Say you bought LLY on this big dip down. How many times have you bought something and what you'll do is say, okay, well, I bought it here. I'll give it about this much risk. This is my risk reward. Okay, but I'm going to put my stop right below the low. And how many times does that get taken out? A lot. Now, that's what happens to beginner traders. But once you've been doing it for a while, you begin to appreciate just how often that happens and how that becomes a signal in itself. Like sometimes you want price to go down there and search for other people's stops, and then you grab it up at that point if you have a reason to, like a level that's below it. And so when this first came down to the 50% level at 322, it didn't quite get to that 245. And I was like, what's it going to do? But just kind of note this, the price action. That level was something that held from the upside. Okay. It held from the upside. So you knew that this thing was not going to recover right away. And it came back down to the next level. On earnings, it tanked to that roughly 245 level. Not exactly, but that volume profile level going back all the way to the price action around 2017 to 2020. That ended up being the level. And then you get that low sweep. All those people that got shaken out like, oh no, it's going to go lower. Now they're out of the trade and they're rushing to get back in. And again, zoom out, bro. It reminds me of what I had called the trade of the century, which was Amazon, where Amazon pulled back almost, how much did it pull back? 56% from its high back in 2022. I mean, was Amazon going to go out of business? No. And and look, this was a 20-year, all the way back to 2001 low, 50% level at 94.51 on Amazon. And it was just so, I hate to say obvious, because I mean, opportunity is never obvious. When something's going down, it feels bad to buy it. Trust me, it feels really bad. But I mean, you get a big giant pullback on money printing companies that are not really going out of business. I mean, United Healthcare is not going out of business. It was like $8 billion in yearly revenue. It's we'll see. But this same thing's going on with Eli Lilly. It's been printing money for decades now, and you finally get a 50% pullback to that 640. I've unfortunately missed, it seems like, Humana. That is another one which came down to, where is that? It was the broader 50% from all the way back. I would measure it to here. Well, it has come down below. We'll see. We'll see about Humana. I haven't chased into that, but that's another one right there. And those are basically the three that I've got on my radar for buying those pickups. Okay. I mean, some of the others. By the way, if you guys have symbols that you think fit this criteria, post them in the chat so we can take a look at them. That's what this is all about, is opportunity generation. Like I said, I looked at LLY because it was definitely brought up last week. But I think I always gaslight myself. Like, can this thesis be that obvious? You know, like, is it really going to be that obvious in about 5 years when these healthcare companies are making so much money off of providing medical services? Because healthcare is not getting cheaper and it's not going to be affected by inflation, because the price of healthcare is just going to go up with inflation. You know, people are just going to, you're going to have the same goods and services, the same chasing an infinite amount of money. So even if you believe that fiat is infinite and going to be worthless, people are still going to use fiat to buy medical services, and whatever they have, they're going to use because they want to stay alive. And so, you know, constantly, I'm on X and I'm reading people's analysis of just the fiat money system is all going to collapse. It's going to be worthless. I mean, maybe, bro, maybe Maxi, but I just think that, you know, if you think about it logically, economically, like, yes, okay, they're printing more money, right? There are a limited number of goods and services that are chasing after, or excuse me, there's more money chasing after a limited number of goods and services. Why not just think about in terms of, well, what companies are going to be able to raise their prices to keep pace with inflation as this happens, if you're so convinced of it? It just makes a whole lot more sense than buying something because you read memes about it. And you know what? I've had a bit of a humble pie check. I'm not going to be too mean to all the Bitcoin maxis, because I think that there's an increased probability that the top might be in. We'll look at that here in just a second. But yes, we'll look at UPS. All right. So what else? Oh, well, we'll look at symbols in the later half. So put them in the chat and I will. But I want to talk about my topics here. I missed, I didn't miss it, but yes, I did miss it. I saw this as a potential trade um, this week. Early in this week, I talked about this because I like one of my favorite streamers is Asmongold. I don't know if you guys watch him. He's a gamer, got famous on World of Warcraft. Uh, when it comes to current events, I don't always agree with him, but he's right. But in this, I do agree with him that what's going on right now with one of the largest gaming companies, Roblox, is interesting. And basically, have a seat, Roblox. So they are in a little bit of trouble. Let me kind of recap you a little bit. Um, they have about 100 million active users. I didn't even realize that how big they were, and a big portion of those are kids. Now, I don't get into politics. I don't moralize anything, but if I can, but if you got a platform where you got kids playing, there's no reason for adults to be talking to them at all. Like you shouldn't have kids and adults talking to strangers. Period. Like my fiance, she plays some Disney game, she said, and the most you could do in that game when you're online is like wave to people. Like you could only emote, you couldn't talk. That's smart. But they got a bit of a PDF problem. That's I think that we'll use that on their platform, and rather than address it immediately, they're banning content creators for trying to do their own little Chris Hansen for these people on the platform. And so I talked about this with some friends earlier this week, like, wow, that's horrible. And then about Thursday night, last night, I was like, wow, like I think I need to like take a trade on this. Like, I don't like to trade on narratives. I don't like to do that because I'd rather trade on technicals, but I think I want this. But then overnight, this got announced, and also the Louisiana State Attorney General launched an investigation, and I missed my opportunity because it was down. It would have been good to start the trade, let's put it that way. Like really and truly, what I would have liked to have done was, played this spike. Was it Thursday last week? I didn't really know about it Thursday last week. It was really about Monday this week, but try to grab it at 130. But overnight, of course, it dropped, closed about 6%. I mean, anytime I see something like this, like it's juicy for a short anyway. And the best part about it, one of the best parts about it, if one were going to um, one second. If one were going to actually take options like puts, because I wouldn't short the shares, but it would be fun for taking puts, is yeah, look, I looked at this last night. This is a chart of Roblox and Thinkorswim where I have a implied volatility indicator down here at the bottom, and that is very, very low. So, or average, just below average. The yellow line is average, and you don't want to be buying options when option prices are high. Implied volatility brings the prices of options up. You want to buy it when it's low. That way, IV can increase and increase the price of your options. Oftentimes, if you have implied volatility increasing your option price, it offsets your theta time decay. That's why it's really good to buy options about 3 to 4 weeks before earnings, never the day before. Degens. So we'll see. We'll see. That would have been fun to kind of play, but I was late. I came to the same conclusion as everyone, and I can't. Like I said, I can't do what everyone's doing. So we'll see. We'll see if it pulls back. But I don't think they're going to get good news. But also, I can't just jump into it. I don't know. There seems to be some money there, but I'll look at it this week. We'll see. We'll see it settle out. See if the price comes up a little bit, and do that. Let's talk. Let's talk price action on. Well, let's do an update on Monero, and then we'll look at Bitcoin. So the price action wise, I would have, of course, liked for it to have stopped at 250, but now I'm looking at the 220 level, which is the volume profile for there. Now, the thing about Monero, as it has been the case for a long time, is it is an actual cryptocurrency. I mean that seriously. It is a privacy by default currency that is used online to buy goods and services. Yes, some things illicit, maybe most things illicit, but that fits the market share of Bitcoin's early days before it got taken over by corporate Ponzi's and memed so hard. Now, there is a lot that has happened. Quick recap. There is another, uh, we'll call it a coin, another coin called Qubic, which has been trying to take over the network. How are they able to do this? They run a useful proof of work network of miners, where they're mining their coin, but also doing AI, like large language model and artificial general intelligence modeling. So they're able to sell their computing power to other uses. They're also able to get past terms of service on computing uh, rental service. In other words, you can't just go on like Amazon Web Services or Azure and then load up a crypto miner. They're not going to let you do that. If they find out, they're going to kick you off. It's against their terms of service. But if you are doing something else, like, I mean, it really is kind of some terms on how much you can fly on the radar. But if you're actually doing useful work with the CPU, the processor, they'll probably let you go. But the thing about Monero is it allows for merge mining. In other words, you can mine Monero at the same time. And so what their whole strategy has been to mine Monero at the same time they're doing their processing, and then they're going to sell the Monero to buy their coin. That's been the whole strategy. Now, there has been a lot of Twitter articles that have been claiming that, like even Cointelegraph came out and said that they have taken over 52% of the hash rate. And this was just, earlier this morning. Okay. But that's just not true. It's not true because now they're actually showing their mining, cubic from 1,000 times ago. The highest they got was about 31%. And then now it's come back down to about 7% for the last 100 blocks. So in the entire time today, they could not have been more than 30 something percent. And so this has been kind of like a repeating Twitter reshare, repost of FUD. And, I've actually not consulted with, but looked at, I've been following this very closely because, I am big into Monero. I mean, I think I think if we don't have Monero, we don't have cryptocurrency at all. Like, I'm not really that into, Bitcoin anymore because it's just been taken over by meme lords and corporate Ponzi's. I mean, you can't use it as a currency because it's traceable. I mean, it's I posted this earlier today where there's, I mean, already you can track pretty much every single, well, you can track every transaction on the Bitcoin layer one, and there's entire industries set up to uh, go and do forensics on Bitcoin blockchain. And it's always been the case where, with these tumblers and these anonymizers, these services like Tornado Cash and things like that, that, uh, they're censoring people that, like like if you, several people, maybe a year, I don't think I've heard many instances about it recently because it caused such a kerfuffle, but on Coinbase, if you deposited Bitcoin and it had come from one of these Tumblr services, a lot of people were reporting that they were getting questions like, "Hey, where'd you get this? We gotta lock your account until you tell us where you got these Bitcoins to make sure you got it legitimately." And so the whole idea of fungibility, it means one thing is worth another. Like for instance, this one Sacagawea coin is worth another Sacagawea coin. Except actually, these aren't Sacagawea coins. One of these is a Sacagawea coin, if you can see that, and the other one is a Canadian dollar, actually. So these are not fungible because they're worth slightly different things. And you want to have something that's fungible. Money needs to be fungible. It's one of the properties of money, and Bitcoin fails at that. It has other properties of money, but it's definitely not fungible. But if all your transactions are anonymous, private, untraceable, then it doesn't matter if you have one Monero from here, one Monero from there. It doesn't matter. It's all fungible. That's the idea. That's why it has to succeed. And if it doesn't, maybe we'll find something else. But I'm all locked in on it. And look, you're just not gonna make money jumping in here at these highs. Maybe you will. Maybe you will. Maybe I'm wrong. Like I said, I've had to take some humble pie, but it's just, especially not what's happening this week. Especially not what's happening. Oh, and by the way, so uh, I'm going to post this in the chat for you guys to read and make your own opinion based on these people that have looked at the hash rate, and it's not 51%. What they were able to do more than likely was capture, or excuse me, rent the mining power to do a few of these multi-block chains of selfish mining where they would not report to the pool that they had gotten the blocks, and make everyone else waste their time and then have to come back and reorganize back up to the main chain. Lots of dark magic. But here's the thing. I actually think that a lot of good is going to come out of this, because even the guy that's doing this, he's having Monero based bounties put on his head, actual person, which I kind of thought was going to happen eventually, because you know who uses Monero, right? Like regular law-abiding citizens. But there's some people that maybe they have different moral compasses that are using Monero, and they probably have a lot of it, and they're not too happy that you're taking the price of their favorite thing. So, and he's doing a dangerous thing. But he responded to that by saying, "You guys realize that we're trying to make Monero stronger, and that they're working with the developers." Me personally, my opinion is they need to make it more profitable to mine, because even in this whole, apropos of this whole kerfuffle, I looked into starting up some Monero mining rigs, and I found that even if you have free electricity, it will take you about 5 years, more than 5 years, to recoup your hardware cost. Now, there's always been this hardware recoup cost in mining for years and years. I've been through just about every cycle of my mining cycle in Bitcoin, going back to 2012, and it would kind of ebb and flow. The price would go up. A bunch of people were like, "Ooh, I can make a lot of money mining," and they'll buy a bunch of GPUs. Because what it'll look like at the price they look at is, okay, I can recoup my cost of hardware in about 3 to 6 months if I start buying all these graphics processors. I turn them on. I can just pay them off in 3 months. It'll be all Bitcoin profit. Well, what happens? The price of Bitcoin goes down. Now you're stuck with all these miners, and now your break even's about a year, 2 year, maybe even 3 years, depending on where it went down to. And then this would happen again and again. And the thing I would always tell people when they come to me over all these years, before it became entirely industrial centralized mining, is you're always better just to buy the coin outright. If you want to get it, you can, but then say, "Well, I want virgin Bitcoin. I don't want it. I don't want anything, any transaction history behind it." It's like, well, that sounds like a problem for Bitcoin itself. Again, fungibility. But you can't attract miners at scale to decentralize the network and make it invulnerable to attacks, unless the price is high enough. And that's always been my thing about Monero. Like, I don't want the price to be like mooning, because then it attracts unwanted attention from, what Bitcoin has. It no longer becomes useful money because people don't spend it. In fact, when Monero got up to its high of about what did it get to 420? What did it get? Did it get to 420? Yeah, I got to 420, of course. That's always a good resistance. When it got to 420, the number of transactions on the Monero network hit like a multi-year low. Why? Because people aren't going to spend something that they think is going to be worth more later. That's why Bitcoin fell as money, among other things. But it is really good number go up technology. Bitcoin itself, though, is doing a thing, and it's at a very, very key level today and yesterday, by the way. So broadly, let's look at the weekly. And at all these instances, I have to remind everyone about this very simple concept of false breakouts. What you want when you have an actual breakout of an all-time high, let me clean this up a little bit. You want your green bar to look like that. Now, again, this was back from the 2017 high, And this was the November of 2020 after the COVID low. Okay. You want a big, big green dildo. Okay. Big, push up against that resistance and close solidly above the passive. And then you can have your big yeet that you throw leverage on and make a little bit of money. It gets a little volatile, but hey, have fun, right? You can do it. You can do it then. But you can't do that, or you can't expect that when you have a situation where you have a lot of hesitation. I'm not a candlestick trader. I don't know what these things are. I know what doji is. I don't know what it actually looks like, but I know that's a word. But you can't have that kind of hesitation and uncertainty. You have to have certainty. You have to have that big green bar, or else you end up with a situation like there was at many times in price history, doesn't matter what it is, where you have a false breakout there. This is back in 2021, or a few weeks later, you have another one where it fails to break out. People just weren't buying it. They're not buying it. And you can see it on the chart. And that's happened multiple times this year. And of course, critics will say, well, it's going up forever. It doesn't matter what happens this week. It's going up forever, bro. Fiat's going to go away. Country's going to be bankrupt. Like, do you really want to like live in a place where like the money supply is now worthless? Like, do you have guns and ammo? Like, does your aunt, does your grandmother, does your mom and dad, do your boomer parents like know anything about this money called Bitcoin? Like, are they going to be able to get food with this Bitcoin right now if it happened like right now? I don't think so. So let's walk back this whole, Bitcoin is going to take over fiat if it collapses thing, because you don't really want that. You think you do, but you don't, because that's bad. It's actually bad. Like, outside of Twitter, believe it or not, there's a world outside of Bitcoin Twitter that still likes to use dollars. Yeah, they know that like state costs more this year than it did last year, but that's what they've been doing all their lives. They're not going to change. You're not going to change them overnight. I try not to get into politics, except when it comes to that. And again, when you had this breakout in November of 2024, big green bar. This earlier this year, December, January, false breakout down into the whole April thing. This last breakout, they're getting smaller, but again, big green bar, okay, and then you've got a new all-time high. Yay, yay! But now anything can happen between now and Sunday night when this weekly bar closes, but you're going to have another chance at another false breakout. Anything can happen. I'm leaving that on the table, that anything can happen in price, but be wary, be wary. But it's actually really interesting when you kind of dig down into the price action here, because what's happened is multiple levels of confluence. You may notice, if you've been watching my live stream for a while, that I've slowly started to add exponential moving averages. I'm used to be a big Ichimoku guy, but I've been convinced of the validity of using exponential moving averages, because right now price, especially over the course of this weekend, over this week, you have the big all-time high hit and fail earlier this week on Wednesday, and then came back down and rode that 89 EMA on the 4 hour, which actually ends up also being the daily 21. These are just ones my friends and I use, but a little arbitrary. But what's not is my tried and true 50% level on the daily. Okay, that's what it hit on Thursday right there. But more importantly, the whole volume profile of this consolidation range from this all-time high test is right there at 118. Now, this bar hasn't closed yet. We got about, 3 and some change hours left. A single break's not going to kill it. You could recover. You could get a recovery of 6% in a weekend. Who knows? Come in with some low volume. Maybe they want to try to pump this price a little bit. But I don't know if you guys know, I talked about this last week. MicroStrategy announced last week after their earnings that they're not going to be diluting their shares to buy Bitcoin anymore. I don't think that this was a choice that they made. I mean, they were all big on doing that for over a year now. But I think what's happened, in conjunction with all these braggings about these funds that are putting their money into MicroStrategy, BlackRock's investing in MicroStrategy. When you have people own your company, own your shares in your company, they tend to have an opinion about how you handle their money. And I don't think they like the fact that MicroStrategy was diluting its shares so much. And so you're not going to, I mean, you may not see these big $1 billion purchases coming in here anymore. We'll see. We'll see. We'll see. I'm a big we'll see Chad. But I still have a long-term target on MicroStrategy to zero. Like in the history of finance. And look, this is just an esoteric, me being a little I got a little bit of ego in it, I suppose, because I don't like what Michael Saylor has said to people. If there's one thing I can't stand for being in trading and doing trading education, like this is trading education. This is me doing it for free. I don't charge people anything. But talking about trading, teaching about good investing, that kind of stuff that has worked and I think will work. I don't want to take people's money. I don't want to lie to people. But telling people it's going up forever and give me your retirement savings. Trust me, bro. No risk to you. From a guy that was an admitted fraudster back in the .com boom. The last time he got a hold of a bunch of people's money, he took his stock and possibly the hold on, where's the monthly? The last time he started playing around with his books, playing around with trying to pump his stock by doing convertible bonds was in 2000. And look, maybe people can change, but there's also a reason why we have criminal records. This wasn't a crime, by the way. He just had to settle with the SEC and pay a fine for doctoring his books. But I don't know. I wouldn't be trusting my retirement to a guy that has a track record of this. But people are. Why? Because they think he's going to make them rich. Interesting time. It's really an interesting time, interesting battle of wills right now. He's either going to go, there's either going to be a really, really fun documentary, several documentaries probably on Netflix about one of the greatest disasters, financial disasters in history, one of them, or he's going to be the richest man in the world. And depending on how much you're depending on Bitcoin to retire you, kind of shapes your opinion about him. So we'll see. All right. If you got symbols to look at, go ahead and post them in the chat. Go ahead and post them in the chat. We'll look at UBS real quick, and then I got something else to look at. I want to look at the housing market, actually. Let's see. We're going to look at the Case-Shiller here in a minute. UPS, oof, Jeremiah. I've already got it noted, haven't I? Because this is, I need a soundboard for this one thing. The Valley of Risk, where you didn't, basically, what this is annotated for those that don't know, is when you have a trend, what I like to do, one of my core strategies is to just buy that at the 50%. Now, if you break below the 50%, you need to get out. Why? Especially when you come back up and you hold it as a resistance above you, kind of like what UNH did. Remember? You enter into the valley of risk. It's a valley of darkness where anything you do is going to be wrong because you're away from your plan, which was to buy it here, and now you're just bag holding. Now, what happens when you're bag holding? You guys know this. You bag hold something before if you trade long enough. If you sell it, if you get out, if you capitulate, it goes up. If you hold on, it just keeps going down. Now, that's not always what happens, but that's what feels like happens. And so you just got to stay out of the valley of risk. And unfortunately, that earnings this week on Monday just took it deeper. I mean, just imagine somebody that's in this trade. Jeremiah, I hope I'm not talking bad about you. I hope you're not like in this. I hope you're looking for opportunities in it. Because UPS is another company that's not going out of business. Like you can't really replace. You need trucks to deliver all the stuff. Um, but are they profitable? That's the question. But yeah, I mean, somebody that's been in this for the last 2 years has just been having a grueling time. I might buy UPS right now. Let's do a volume profile analysis. Like we've got a lot of good track record right here. So where is the volume profile? And by the way, this is the kind of stuff I want to buy. Stuff that's dying, stuff that's dead. Now, unfortunately, we already had a pass of the volume profile level at 97.57. So we need to go back further. Let's go on. Let's keep it on the weekly, but let's go back to. Oof. I don't want to go back too far because people challenge and say, "Oh, you can't go back that far." So all right, I think you can. Well, that next level is going to be 73.10 right there. And you remember what I talked about earlier about low sweeps? How people will set their stop at a low, and then oftentimes price will come down, dip down, and go up like UNH did at 245. There's actually probably in this range right here, like start really getting interested if it breaks 80. If it breaks 80, if it starts to take out the COVID low, man, what a big run. This is one of many examples for why when a stock is just going up, oh, up, don't ever feel like you're missing out and you got to chase it. See, seeing this so many times over more than a decade is why I physically can't make my hand buy something that's on going up because I know this can happen. Eventually, something's going to happen. Experts are all going to agree this company is dog shit and you don't need to hold it and it's going to go down and everyone's going to say, oh, the company's horrible, it's never going to recover, and that's going to be the time to buy it. So you'll always get that with everything. I mean, guys, look, Nvidia, I know Nvidia has been the rage, but have we so quickly forgotten like just 4 years ago where Nvidia, even with, people talking about AI and them doing all the graphics processing, Nvidia dropped 67%. You can't see it now because it's up a bunch, but that should tell you something. I mean, yes, if you bought it here and you'd bought it, there, you would have still made money. But look, you're going to get a pullback. You're going to get a pullback. So UPS, the first thing to look for as part of our lesson is looking for a low sweep of that 2022 low, like right below 80. See if you can start maybe taking some lower risk trades with tight stops. Maybe get like some kind of a spike. That would be what I look for. And then 73.10 is what it can potentially come down to in that case. Because it's definitely already, yeah, 50% is gone, obviously. So yeah, somewhere below the COVID low or at 73. Yeah, I'd be really content with that. That's actually 73 would be a really good level because that would be a low sweep. If it comes down there, kisses that and goes up, I like it. I like it. That's really good. Set your alert there. Give it a little more. Now, if it starts to turn around, you can start playing with it. I'm going to wait for 73. Fuck, all right. Let's do the alert right now. Usually I take notes, but let's just put it in. The new alerts in Thinkorswim still. I'm an old trader. I do most of my stuff in TradingView, but yeah, let's see if it gets to 80. Yeah, I said 80. Let's see here. So there's a lot of stuff I can't, like my 15-minute scans in the mornings. I do those in Thinkorswim. And Jeremiah looking for 73. Okay. Oh, yep. All right. We'll see. Good call on that. Let's keep watching. Keep watching it. Keep dying. Keep on dying. All right. What else we got to look at? Facebook. Well, Jen's here has been using Facebook for indicators. Like, how doomed is Facebook been telling me? And by the way, where on Facebook are you seeing these things, Jen? Amazon bans are going to kill UPS. UPS still delivers stuff from Amazon all the time. Sponsored. Wait. Sponsored posts tell you that UPS is doomed. What? What? Wait. Can you share one? Why would sponsored posts be telling you that? because like it can't be that obvious that hedge funds are buying sponsored posts to make people sell UPS stock, is it? Yeah. Okay. Well, that's the thing. Like, well, I mean, pretty much now, I assume that everything on the internet is fake. When I go to Twitter comments and I read people saying things, I don't presume that they're real humans. Sometimes you can tell if they're real human, but like low energy uh, posts are clearly bots. You just have to assume. Oh, related to something, not like ads. Okay, if it was an ad, I'd be but yeah, that's a good indication. It's this is the kind of stuff that I want to buy. Not yet, but did I tell the story of the guy that hit me up earlier this week, told me I need to yeah, I did, I did. I forget that. Yeah, man, like, I just can't buy stuff that's ripping, especially not on leverage. I'll buy anything on leverage. I just you don't need to. You don't need to. Get good. Don't try at least get good before you use leverage. All right, let's catch up, and then we'll look at housing market a little bit. Just as kind of a curiosity, because I'm thinking about trying to buy a house one of these days soon, soon. All right, FIS, Fidelity National Information Systems. Ooh, they're a tech company now. Well, you need to get over 84. I mean, look at that. Boop. To boop. Yeah. Boop, 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 boop. Yeah, I can't really see anything obvious here. It's kind of all over the place. Um, yeah, I don't have a read on it. FIS. Let's see. AMN weekly spike. Unless I'm missing something. Tell me if I'm missing something. Weekly spike. It's a secondary spike in a dead dying stop. AMN healthcare. You said healthcare. You said the magic word. Hold on. Go all the way back. Where's that volume profile node? Ooh, did we kiss it? Did we kiss that level? Hold on. Uh-huh. Oh, oh man. That is beautiful, Renovate. Ooh wee. Let's get some of that. Maybe I need to do a Wednesday live stream. Every once very often on Fridays we have these kind of things. Thank you so much, dude. This is why we do these. This is why we do these. It seems like we run into these kind of opportunities, and I'm like, well, crap, it's Friday. I can't do anything. Wednesday is my no day. You know what? I'm getting over that, Jen. That's a superstition of mine. Wednesday, yeah, you're right. It is my no day. The reason I said okay, but that'd be a good day to do live stream maybe because I'm not going to trade hard on Wednesday, but Thursday is usually a pretty good trading. Actually, Tuesday and Thursday is the best trading days, both anecdotally and statistically for me when I look at my records and stuff like that. Mondays are Fridays are really hard because you can't really continue things. You got to take the weekend rest. Wednesdays just are. When I looked at my trading history for recent years when I was logging it, most of my highest losing percentage were trades I took on Wednesdays, and so that's my day off. So why not Wednesday and Friday stream? Well, that would actually make my channel grow and people like watch this and like yeah, I don't know if that'd be good because then if they did what I was doing, I wouldn't make money. Wednesday for signals, Friday for teaching. You can bug me about that. We'll see. But AMN, oof. Oh man, oh, just just look, anything can happen. It may not hold this 1489. I'm sure there's a very good reason why it's fallen almost 90 freaking percent. See, that's the thing. Like opportunity is never obvious. Like it makes even me, because I'm human and you're human too. It makes me nervous to buy something that's down this much. It makes me want to go read up on why it's down that much. But then what I'm going to do is I'm going to consume the opinions of people that justify why it's down so much. Okay. The price is reflected in the opinion of the market. Um, this is why trading and investing is hard, among other things, is because this is not obvious opportunity. This is scary opportunity. But I'll tell you something. The things that have worked out really well for me, which, again, excuse me, all the trades I've made that worked out, they always felt uncomfortable at the beginning. That's because, like I said, I don't buy stuff that's going up. Um, but yeah, let's actually get really granular here. Okay, so this is a weekly. That level is really 1489. Does it move if we get granular? No, it's 1489. What is the low? What is the low of this spike? The low of the spike is 1490. Okay, maybe I didn't drop a penny. A penny off the article. A penny off the volume profile point of control. This past guy, just that's why I call a volume profile a damn cheat code. Jeez. Wow. Thank you. Now, of course, I'm going to be a little like mopey that I'm catching this a week late, but I guess I can be okay with that. Let's just see if we can get like a pullback to here. That is a beautiful thing. That is a beautiful thing. All right, Jack, and it's healthcare. I almost just want to like, healthcare stock. If I buy enough of them in 10 years, our portfolio is going to be up. Jack in the Box. Don't know if I want a restaurant company. I know that's fun, but I don't actually have any Jack in the Box around me. Hey, you know what? It's respecting the level. It's respecting the COVID low. It is. It is. Like, I'm not mad at this. I'm not mad at you taking some risk on your money on this. But yeah, at least you know when you're wrong. In that, if it goes any lower, you know to get out. You got a Jack at 19, okay? You got some structure down here. If I was going to do this, I would do like an Ichimoku breakout. In other words, you had the price come above the cloud here, and the momentum was not above it. But this next time, if you get a 24 pop, you're probably going to get momentum out at the same time. That would be a good breakout. And then you really just want to kind of put your stop back down. You don't need to go all below the low, because remember we talked about low sweeps. Might just frustrate you. Like it needs to, if it's going to break out, it should break out from that point. Okay, so you don't need your stop to be below there. You can put your stop back in the middle. So that would be how I play that. You know what? I'll put that on my list. I'll put it on my list. You got to respect the level. It's there. It's there. Everybody sees it. Self-fulfilling prophecy. All right, let's see. Okay, well, one thing I want to talk about, and I'll try to segue this. If you give me a second to segue this, I'll talk about this with I'll talk about this with Bitcoin a little bit. So, no, actually, let me start with talking about Bitcoin. So, let me eat a little bit of humble pie here. So, for many years now, if you go back and you look at my videos on YouTube, I've talked about just what I talked about here, the Ichimoku breakout strategy. Okay, it's very simple. Price gets above the cloud when momentum, which is the Chicago or the purple line, gets out of the cloud at the same time. Okay, that is a strategy that I've done many researches and deep dives in. As far as, especially with Bitcoin. Now, not all stocks is going to work on with Bitcoin. Over the last, since 2012, it has worked to just follow that daily signal. Okay. In other words, as long as price and momentum are on the bullish side of the cloud, even if it's in the cloud, even if price pokes its head out, as long as both those things aren't true, it's bullish and you stay in. But when it goes bearish, you get out because you want to save yourself from that 60 to 80% drawdown, which has historically happened. And believe it or not, can happen again. And the last time that happened was here where I pulled a short out of Bitcoin. The last short that actually freaking worked was when it set up here. Price was already outside of the cloud, and then momentum got out here. Triggered the rule for an exiting of the position, going to tether or whatever you want to do. And oops, my finger hit the button. And yeah, that worked. And then the thing is, well, what happens if you don't get back in? You're going to miss out on the gains. The HODL bros are going to be like, ha, 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 you missed out on gains. Well, actually, if you had closed on the rules here at 96 to 90, 279, and you had re-entered when the rules for bullish were true, which was about here at 94, you actually did get in at a price that was lower by about $2,000. Now, yes, you are going to get some chop that's going to cost you some money, like it happened earlier, just being full disclosure. But the where it shines is that it's not going to do you wrong in major bullish trends where price hits the cloud and momentum doesn't get out. And it's going to get you right back in when these things are true. The main thing is it's going to keep you out here where price is really in one of its cyclical cycle downtrends, and it's going to let you in back in at a lower price. Now, if you look at a single instance, or if you look at 2 instances or 5 instances or 6 instances of this, it's going to look like, well, it's kind of all over the place. But over the years, it has worked consistently. And I, as the wise and experienced trader that I am, have not followed my own advice. Told you it's going to be some humble pie, because one should be in Bitcoin from here and riding this up to here. But I'm not, because I let my ego get the best of me by reading freaking Bitcoin Twitter. And every time I get on X, it's showing me the dumbest takes from the most insufferable people. But you know what? The price doesn't care about that. The price does not care what I think, what they think. It only price is price. It just is. So I'm looking at, and again, this is something that is difficult because while I know it has worked for years, these events only happen every few months. And that's actually, I mean, time goes by fast in life, but not when you're trading and you're looking at something every day. It actually goes by pretty slow. And you forget your rules. You do. I do it all the time, obviously with this. But we're not in the bearish condition of Bitcoin. But I will look for that. I will begin to look for it if this ends up being a false breakout. And where we become bearish is if we get price and momentum on the other side there. Now, maybe next week, if that happens, we can start going into the banana curve of Bitcoin. You know, you'll see next week. But we won't do that now. But I kind of want to close with this. Oh, yep. If you got some symbols to look at, let's look at it. And then I'm going to close with a little quick note about that, a little segue into housing market. Pull back to the cloud there, just to see it. ARM. So ARM, I'm assuming, is tech, I bet. Let's see. Looks a lot like Intel on a wider scale. I think you've got a good reason to pick it up off of the EMA. But again, EMA is new for me. I don't trust the EMA trades just yet. But you are kind of in the middle of the consolidation. Normally, I just pass on this one. What about SMCI? Sorry to segue, but that's one that we were looking at. And it's also kind of doing the same thing. It's kind of riding its 200-day exponential moving average. Sorry, EMA. Yeah, in case I did say something else. I don't know, man. Like I said, you know, tech is hot. AI is hot. It's been hot for a long time. it's real. I need a really good setup on a tech thing to buy it now. I know some people are kind of playing around with some stuff, but I just you saw before. For the next cycle, going into 10, maybe even 20 years, I want to own healthcare stocks. I just do. Maybe I'm wrong. I don't know. It just feels obvious to me. So I don't want to have a read alarm. Let's see. LMT, Lockheed Martin. Well, unfortunately, you would think that they would be doing well with all, I just don't think that we have enough war. There's just not enough war. Or if you want to get into, let's see, so Raytheon, or yeah, RTX. Wait, I think actually was it? No, that's RTX. Yeah, I think is that Raytheon. What is Raytheon? Basically, the arms manufacturer that's been doing really well is Raytheon. And what is it? You added to RTX recently? Yeah, Lockheed Martin's just not been doing that good. I actually own some, and it's just been kind of hanging out here for like years and years and years. I own it from way back, but this is kind of something where it looks like I shouldn't own it anymore. Because look, it's already broken below. I think I've actually noted this in past live streams because I leave my stuff on, try to save my charts. It's not holding its level there. That's not a good situation. I don't know if I like it. I don't think I like it. It could do anything right here, but it's definitely not giving me bull vibes. No. All right, let's see here. Snapchat. You're catching a falling knife there, aren't you? Let me not poo-poo it. Hang on. Stop being a dick. Let's do an analysis of this low right here. See why opportunity is not easy. I see that and I'm like, it's going down. I don't want it. I don't know. Do they make any money off of Gen Alpha? Because that's who's on Snapchat. I don't know, man. That doesn't look good. I mean, you had a very solid level there. Basically the COVID low, which it was like holding um at 789, and it comes up on earnings. It drops below it on earnings, comes back up to test it as resistance. Eh, be careful. Be careful on that. Solana. Now, I want to get into Solana. I do. I really do want to get into Solana. But the problem that I have with it is once I learn about how centralized it is, like it's like the Solana, what is it, whatever the consortium that does it, it's just really hard for me to get excited about it. Even though I've thought for a long time this was better than Ethereum because the fees were cheaper. That's where all the meme coins were going on. But you know what? I was wrong about that because for some reason, despite all fundamentals pointing the other way, Ethereum has moved instead. So a buddy of mine that I told that to, he said, well, of course, Larry Fink, CEO of BlackRock's not going to lose. And BlackRock's back in Ethereum. I don't know. Yeah, I don't have a good read on this one, and I don't know. I don't know. Look, crypto. I've been in crypto too long to like YOLO in on these narratives. I've got to focus on charts of cryptos. I have to be chart focused because the moment I start going on X and I start reading the community of some crypto, it's just look. I can't be in the same trade as people that are posting tons of rocket emojis and making fun of other people for how poor they're going to be if they don't buy it. Like that's just so off-putting to me that it's just those people don't get to win. So I can't be in the same trade as that. SLNO. Have you heard of BetaNet? It's being funded by a crypto. I don't know, man. Like I said, I gotta look at the chart. I don't want to hear stories. SLNO. Well, I like that it's going down. I like that it's got a big dip, but I want like probably a deeper dip. Like let's go back to the start of this one. This is a weekly, so I would probably go back to here. 47 is going to be definitely a level. Where's the volume profile of that 47? Yeah. Yeah, I would, oh, I should set alert there. 47. I'm looking at 47 on that. Pretty clear. Even though, yes, I have my, in the shorter term, what you may be looking at is this 50%. Okay. It could, you got a 200-day EMA matching up at 6666 here. That's pretty good. That's pretty good. You got response there, but unless you can get it at that level again, I wouldn't chase it here because, like I said, where I would want a little bit more of a deeper discount here, or I just wait. I'll just be patient. The things that I really want, are medical supply companies. Uh, uh, Wolf are like Stryker, Boston Scientific. I'll pull up the symbols here in a second. But those are very vexing because what was it, 47? What's that, 48? Those are vexing because those are things that I can't buy. Now, the saying goes, a stock is never too high to buy and never too low to sell. Um, but yeah, we might get a discount on these. Stryker makes medical equipment, like I think they make like artificial knees and hips. That's bullish. That's bullish for old people. And Boston Scientific is BSX. Clearly these are, well respected as making money. And so may just have to be really patient looking at those. But where you really want to be, in addition to all the other healthcare, is in things like this, where, they're going to be constantly at the forefront of things that boomers are going to be putting in their body to fix broken parts. Um, but of course, the market knows that, and that's why the price is there. EHC, Encompass Health, yeah. So may have to take some small pullbacks in these, or hey, you know what? Look, a joke I saw not too long ago was now their next trick is going to be taking all the boomers' money before they can before their kids can inherit it. Yeah, I mean, wouldn't it be a bitch if we had right here in the next couple of years, another, I wouldn't say another storm of finance. I mean, we will. Look, we're going to get another crash. Like, we're going to get another 2020 crash, or we're going to get another 2008 crash. These are, or we could even get a 1960s scenario. What I mean by that is if you go back and you look at the 60s, go way back, and you look at the period between 1965 and actually further more than the 60s, basically the entire 70s, 15 years, a generation, 15 years from 1965 to 1982, the year I was born, actually, of just zero change in the stock market for 15 years. I mean, yeah, you had trends here, okay, but these trends from the highest to the lowest were a difference of 46%. There was some trading here, there was some opportunities here, but you weren't benefited by the tide of rising stock prices. Very different situation there. Very different things happening. Very different. I wasn't alive. I actually don't know what was going on. I can just look at the chart and I can say, as a trader, that would suck. Like, whatever we're doing now is easy mode compared to that. And really, it's only been easy mode for the last 12 years. Really, since 2013. If you really kind of look at things in perspective, the world really changed and started. I mean, look at the growth you had, in the stock market, and you going from that. Even though 1982 is back then, I mean, you kind of had ebb and a flow, but really in the last 12 years, we've been in kind of bizarro land when it comes to stocks. And, it's so we're gonna have some now. We recently, you see that big dip right there we had in April. That is a good thing. We had a washout this year. Last time we had a washout where there was a lot of fear that the world was going to end, that tariffs were going to, destroy everything in the economy. Last time was in 2020. Of course, we had the kind of sustained one back here, but you need these kind of big washouts to make the market go up. You do. Um, what this is, 2008, is a 3-year down cycle. No V-shaped recovery there. A slow grind down. I can't even tell you what that was like because that was before I started trading. I actually started at the beginning of this big bonanza time, which is, I started about 2012. But I can recognize that that's we're living in a easy mode, basically. So medical robotics products, yeah, ISRG, that sounds very familiar. ISRG, Intuitive Surgical. I mean, yeah, this is a monthly chart, weekly. Oh, let's look at this one for a pullback. Yeah, that nice little dip there in 2022. That's a good starting point. 389. We're gonna have a volume profile level there too, actually, because of yeah. Very good. Very good. Very good. Yep, definitely around 400. 400 ISRG and MDT. That's another one I've kind of thought about. This is an oh well, actually, I've already drew this up because I was looking at this earlier this week. So there it is, 79.63. That's what you want to see. You want to see that nice hold of the 50% level there. Good stuff. Good stuff there. Again, this is kind of like Humana. This is one of those things where it has done a pullback and I've kind of missed it, but keep an eye on it, and maybe we'll give you one more shot. All right. I got a friend of mine I got to meet up with, so I'm going to do a little bit more HNI. We'll talk about houses real quick, and I'm going to leave you guys to have a good weekend. Just remember what I said. Let's see, HNI on a weekly. How come you draw the VP at a different point than the 50% retracement? Good question. What are we looking at just here? We were looking at ISRG. So what I'm really trying to encompass, I could do this. I could do it from here to here. You're right. You're right. You're right. I could do that for consistency's sake because I'm really grabbing the trend, but the answer is still going to be the same. I'm still going to see, that. Okay. So there's really, I mean, the big pocket is going to be down here, but the one that's more close to getting a refined entry on the 50% is going to be here. Right. And so I'm going to be able to see that whether I do it from here or here, basically. Right. See what I mean? So, I mean, I already kind of know that like this area here is going to be the level, basically look for volume profile. So yeah, that's the reason I just kind of selected that. But the proper way, if you're starting, you're right, I should lead by example, is to do the trend itself. I just kind of took a little shortcut there like I would when I'm, getting quick about looking at stuff. That's all. Same level. You can still see it. It's still a big little peak. Little peak there. Little peak there. So let's see. Where did my thing go? Let's do this. So Case Shiller. What was that? So the Case Shiller index is the home price index. And I've been looking because I either want to get a place to live or a rental property. Unfortunately, I don't think I can get both right now. Yeah, you're welcome. I love to teach. Ask me questions. Thank you. So this is the Case Shiller National Home Price Index. Now, all real estate's local, so can't really do much with this as it stands. But one thing I want to do that I think is interesting is this is not inflation adjusted. On TradingView, what we can do is we can divide this by the Consumer Price Index, and we can see what is the real housing price relative to inflation. And kind of fits with what We know if we talk to any realtors or we kind of go on Zillow or talk to anybody trying to sell a house, is that the market has kind of stopped going up. You start to notice a lot more people uh, um, having to lower the price a lot. I have a buddy of mine that's a realtor, and he has had clients fire him because he gives them his opinion, his professional opinion, that they're overpricing it. Because a lot of people, what are they trying to do? They saw what their house was worth back in 2022, and that's stuck in their head. Now, I don't blame them because oftentimes a house is a person's largest single asset. They also don't buy or sell a house more than maybe 2, 3 times in their life. And so they get very sticky. They have to get the most they can for it. And they're so the housing market moves really slow on a cyclical basis. And so it's taken a long time for housing prices to kind of revert to the mean, right? And everything reverts to the mean eventually. It gets out of whack, but um this kind of I thought I would do this. This means nothing. You can't trade on this, but um exponential. I wanted to do an EMA on this right here. We're going to do 3 of them. So let's do a red. I got something I'm going to show you. We're going to red 12. It's going to be at 1 year because this is a monthly. 24. We're going to make that. I'll keep that blue. And then we're going to make this green, and we're going to make this 36. Okay. I can't. Okay, I can kind of see my line now. So what I find interesting and what I think is going to be something I'm going to be looking for. Uh, Look, this can go on for a very long time, and we really don't have that much data to look at, do we? There's all kinds of different charts that come out there that show. Oh, there's one. Did I post this? Hang on, let's find it. This is what's got me thinking about it. Is this I saw it this week? Where did I post that? About no. That's where did I share that? I think I shared it on Discord. 1 second. It was about the home prices. Oh, here we go. Bar chart, by the way, it's really good follow on X. I like him a lot. Households, okay, a housing market, homeowner households decline for the first time in 9 years. Now, just ignore all the FUD of the downloads, but just this is significant. This is significant. The market is, well, depending on what side you're on, if you're a buyer or seller. If you're a buyer, the market is healing. If you want to buy a house, the market is kind of coming back in line. Um, Anything can happen, but it's like we started at the beginning of the live stream talking about the Fed rates. Everyone was really thinking that we were going to get a rate cut, and it's only going to be a 0.25 rate cut. It's not going to make a huge difference if we do. Everyone was sure that we were going to get it in September, but now they're not quite so sure that we are. Probably for the end of the year, like this September rate odds, you can see how it's starting to kind of turn. There is the October one, which is a little more 50-50. Depends on what happens, obviously, in September. But it's not going to change the affordability of houses that much. It really isn't. It really isn't. But we shall see what happens there. So one thing I thought was interesting, and this kind of goes back to the thing I talked about with Bitcoin and the daily trend analysis, the daily Ichimoku breakout, is that if you over a long enough timeline, very simple metrics can work. And so, like whenever you had 2008, a simple EMA cross for this inflation adjusted case Shiller, basically in September of 2007, after having a nice, I mean, this is ultimately what moving averages are for, is like, what is the actual trend and ebb? And over a long enough timeline, it becomes very consistent. And so, when you had this flip back in September of 2007, that's what signified this down move. Now, I thought I was catching the bottom when I bought, my first house in 2009. which was about here. But I didn't know about this. No, nor did I really use it. But yeah, the bottom did not actually come until 3 years later. And then if you wanted to catch the upswing, you had the moving average cross again back in 2013. Remember when Bizarro World happened now that we're living in? And it stayed pretty consistently above it to that point. And has it flipped to go bearish yet? No. So what am I saying? Nothing. I'm not saying buy a house, but it's going to be interesting. It's going to be very hard to follow this over the years. I'll keep doing live streams a long time, but we'll see as the years go along. Are we going to get a housing crash? Are we not? I think we'll be able to see it on a chart, and that kind of cuts through, I think, the narratives if you just read the price charts, because price is a reflection of what people think, their emotions, and their valuations. So. Anyway, thanks for hanging out with me this is Friday. I will be back again next week, very likely. So, if you like this, maybe do a little like and share and subscribe and all that kind of stuff. And come talk to me on Discord. That's where I post ideas and trades when I take them and when I talk about them. So, always glad to hear your ideas. Kerry Bosley. See you guys next week.